Hi, everyone, and welcome. I'm Kathy Luger, a CPA who specializes in helping HVAC business owners take control of their finances. If you're new here, every week I go live to share real financial tips for HVAC business owners who want to grow with confidence without the stress of flying blind. Today's topic is one that every seasonal business owner struggles with at some point: cash flow forecast in a seasonal business. So if you've ever had a great summer but still found yourself tight on cash in the fall, this session is for you. Let's start with the why. Most HVAC businesses are seasonal. You already know this. You make the bulk of your money in summer and winter and slow down in the spring and fall. But here's the problem: your expenses don't slow down. You still have to pay payroll, you still owe rent and truck payments, you still need to market even in the slow season. You may even need to pay suppliers for materials that you've already ordered. So what happens? You're profitable on paper, but you're broke in your bank account. That's where cash flow forecasting comes in. It gives you visibility. It lets you see ahead of time when things will get tight and gives you time to do something about it. You wouldn't drive your service truck without a fuel gauge, right? Well, a cash flow forecast is your financial fuel gauge. Now let's clarify something. A cash flow forecast is not your P&L, and it's not your budget either. Your P&L shows when income is earned and expenses are incurred. A cash flow forecast shows when money actually hits or leaves your bank account. So here's what it includes: cash in. This comes from multiple sources, such as payments from customers for services, installs, and maintenance agreements, deposits on upcoming jobs, equipment or parts sales, warranty reimbursements, dealer incentives, sale of assets, and proceeds from financing. Cash out is a combination of wages and subcontractor labor, equipment and materials, permits, rent, fuel, insurance, job site and office supplies, loan payments, tax payments, owner draws. It's a real-time tool, and if you check it every week or every month, it can help you avoid cash shortfalls, time large purchases, plan for tax payments, and sleep better at night. So let's walk through how to build your cash flow forecast in 4 steps. Step 1 is gather your past data. Look at your last 12 to 24 months of income and expenses. What were your peak months? When did things slow down? Which costs were fixed, like rent and insurance? Which were variable, like materials? What about hybrid costs, such as payroll? It's generally broken down between overhead and admin being fixed, while job-related payroll is variable. And you don't need fancy software. Just start with a spreadsheet. Step 2 is project your income. Now let's look ahead for the next 12 months. Ask yourself, what's already booked and in the pipeline? What typically happens this time of year? Are you running any marketing campaigns? Be realistic. If November is usually dead, don't forecast it like July. Use your actual historical averages as your starting point. Also, include accounts receivable, money that's already been billed but not yet collected. If you're owed $20,000, but it won't come in for 60 days, plan accordingly. Step 3 is project your expenses. Start with the knowns: rent, payroll, insurance, loan payments. Even though only the interest is on the P&L, the whole payment impacts cash. Software subscriptions. Then add the variables: equipment or parts you'll need, fuel, marketing pushes, seasonal hires. Don't forget accounts payable, owner draws, and tax estimates. These are real cash outflows. Step 4, put it together and review the gap. So subtract cash outflows from cash inflows for each week or month. Does your cash balance stay positive? If not, when does it dip? That dip is your warning flag. You've now bought yourself time to fix it before it becomes a crisis. So let me pause here and flag a few common mistakes I see HVAC owners make with forecasting. One is overestimating income. You might hope for $50,000 in November, but if the last 2 years were $18,000, that's your baseline. Forgetting the timing of payments. You may close a big deal in March, but if the payment plan is over 90 days, your cash flow forecast needs to reflect that. Ignoring credit card and loan payments. What's the timing difference between when you charge an expense on your credit card and when the credit card payment is due? Debt payments are not in your P&L except for the interest expense, but they're real cash hits. Not including all costs associated with your income. So if you have warranty income, make sure to include the associated job expense. And not reviewing your forecast regularly. You can't sit and forget. This should be part of your weekly or monthly review routine. Once you've built your forecast, here's what to do with it. Plan ahead. If you see cash is going to dip in April, you can delay a new truck purchase, cut back on ad spend, or push service agreements in February and March. Build your cash reserve. Your goal should be 2 to 3 months of expenses in the bank. Your forecast helps you know how much that is and when you'll have the funds you can set aside. Secure financing in advance. If you think you'll need a line of credit, your forecast gives you the information you need to show your bank before you're desperate. Adjust owner compensation smartly. You'll know when you can afford a draw and when to hold off. And use it as a management tool. Share parts of it with your office manager or bookkeeper so everyone's aligned on cash priorities. If you want to take it a step further, create a slow season revenue plan. What can you do in the slow season to bring in just enough cash flow to stay level? Maintenance agreements, prepaid tune-up plans, small commercial jobs. What about energy audits or indoor air quality assessments? Even a few $1,000s a month during the off-season could dramatically smooth out your forecast. So let's wrap it up. Cash flow forecasting is one of the most important financial tools for any seasonal business. It puts you in the driver's seat. It helps you avoid crisis decision, time your investments, plan ahead for taxes, and pay yourself without guilt. If you don't have a forecast in place, or if your current one isn't giving you clarity, let's talk. We'll look at your numbers and I'll help you build a simple forecast tailored to your seasonality and for your goals. If you have any questions, drop them in the comments or message me directly. This is one of my favorite topics because it gives business owners real power to make better decisions. So if you're ready to clean up your financials, start tracking your cash flow, and make your company more profitable, send me a message or you can email me at Kathy@KathleenLugerCPA.com. Now, next week's live topic is how to build and read an HVAC dashboard. Thanks again for joining me today. I'll see you next week, same time, same place.